What's going on, everyone? Welcome to the Rise Real Estate Investing Podcast with your host, Mayu Thaba. And
Boston, yay. Sorry, I took a pause there. I wanted to say Maritaba. But most of you guys are not watching on video. Don't watch on video because I look like a bum sitting next to Mayu right now. You're all dressed up, looking fancy. What's going on here?
Nothing much, man. How's your week been? Let's talk about this. Oh, this has been a busy week, so let's talk about what has been going on this week. You go first.
Okay, yeah. Busy week on my end. Let's give some updates on the real estate side of things. First and foremost, we got a letter from one of our vacant lands. The property was burnt on fire. You guys probably heard us talk about this. And we got a letter saying that the city or the school, I guess the school, is trying to take ownership of our laneway to get into our garage. And as a result of them taking control of that, we wouldn't have access to our garage anymore. So obviously that's not great because now it's a vacant lot since the house burned down. And a lot of value is going to come from having parking because it's a pretty busy street otherwise. So obviously not great news for us, but we called the city. They've said that it's still in a preliminary process when it goes to, I don't know what it's called, maybe you can confirm, not the hearing, but I guess like, well, what is it called? Like the city council?
Yeah, I'm blanking on what it's called, but I know you're talking about like a consultation meeting or something like that, probably.
Yeah, and the public can show up and all of that and sort of voice the concerns that we can jump on and voice our concern. And very likely we'll get some sort of easement to continue to use the back portion, or maybe they just won't close the back portion, like that small little alleyway towards our garage. They'll leave that open because I think we're the last house on that street.
Just tell them to expropriate us. Just tell them to expropriate our ass.
And you know why the school wants ownership, right? Because there's too much homeless people over there. That alleyway, it's fucked.
Yeah, it's wild. It is.
Yeah.
We're about to be those Karens that like stop any like development and any good things happening in the city, bro. That's what's about to happen.
And not until we actually know we want the development to sell the lot. Get rid of that lot and move on.
Yeah. But it's a school, man. Nothing's going to develop there, right? Like it is what it is. They're just going to use it for RG if they do expropriate us. But that, and we have listed a property. It is sold conditional. One of our student rentals, it just really didn't belong in the portfolio anymore. I think for both of us, it was kind of like, hey, like, are we really in the student rental game anymore? I think this is our last student rental, is it?
This is our, yeah, I think it is. We
guess that Campbell
houses
one
nearby the area.
Yeah, we have some nearby, but it's not like, I wouldn't say it's a full like student rental, like the Campbell ones, but yeah, so that one's listed. It's sold conditional. It's sold on rate day, so that was kind of interesting because we were like, look, based on how the BOC announcement goes, that's probably going to impact how much we're willing to negotiate here. But yeah, other than that, we had a lot of economic changes or policy changes or whatever we want to call this stuff this week. I think the main ones, I'll talk about CMHC. So for anyone that's in the commercial space, you probably already know CMHC's products pretty well. If you listen to our previous episodes with like anyone that's doing development or large multifamily properties, we've definitely talked about the CMHC application there. And for anyone that doesn't know, there's a product called CMHC MLI Select. Highly encourage you guys to look into it. It kind of fully changed the landscape of like commercial financing, in my opinion, right? But that product had some significant changes. So they removed some of the energy efficiency applications. So it used to be that you could go up to 95% and 50 amortization with 100 points to energy efficiency. They completely removed that, which sucks to be someone that had a project midway through. But at the same time, they made it a lot easier to get into commercial properties and take them into commercial financing by allowing people to pay back private money, right? So even us, like the project that I have underway right now, I'm essentially trying to like re-underwrite this and see, okay, like if I don't go, because I'm not going to get 100 points to energy efficiency. I really don't want to commit to affordability. What could I really do on accessibility? It's not too much without it being too expensive. So I'm trying to evaluate essentially what my options are now. So, I mean, ultimately, we'll just have to wait and see how this all plays out in the grand scheme of things. But what else is going on, Austin? You want to talk about the rates and what you've been seeing?
Sure. Yeah, I guess one note to bring up on your multifamily that you're looking at, Mayu, I guess, would you re-underwrite it using the standard CMHC multifamily product now?
Yeah, when we bought it, we were looking actually at standard instead of MLI. Like, I'm just not a fan of spending money for the sake of like a financing product, right? Like, meaning,
right.
If I have to spend money on energy efficiency, like the furnace is fine, everything is fine. but there are some old like baseboard heaters, and like the ground floor is like furnace centrally heated. The upstairs is baseboard heated, right? So I was like, okay, like you could kind of swing this either way with either argument, right? But yes. So long story short, I already did underwrite it with with standard, and it's essentially just kind of double check that and making sure everything kind of still works.
Exactly. I forgot who posted it. Someone posted it that if your deal only, it was Kellen James. If your deal only works as a CMHC MLI Select deal, it's not really a great deal then. And I sort of tend to agree with that, right? Yeah. You can't rely solely on the financing product to make your deal good or bad.
Here's the other thing, unpopular opinion. I'm also not a fan of like a 50-year amortization. But like, that is like, I'll be in debt and my kids will be in debt. You know, like, it's probably not the way to go about this, right? Like,
well, listen here, Maya. You don't have kids yet, so don't even worry about that, man.
Yeah,
that'll be there.
You know, like when you think about like what are we trying to build? Yeah, I don't want to be 80 years old and having to pay a mortgage. You know, that would suck.
Yeah, fair enough. But, I guess we'll jump onto the Bank of Canada rate announcement. Gonna beat the audience's head with the same message that they probably saw all over Instagram. But the Bank of Canada finally did it after 4 years of no rate cuts. They finally cut rates for the first time in 4 years by 25 basis points. Most people saw it coming. Usually what I like to do is outside of the announcement, the Bank of Canada will have like a 45-minute presser where they answer the media's questions. And that's where I really get a signal of what they're planning to do in the future, right? It seems like the news all in all was pretty dovish for the most part. So a lot of people were asking about the chances of a July rate cut. I think it was asked 2 or 3 times. And Tiff basically, in a nutshell, said, he didn't say yes, he didn't say no. He said, look, the data has come out pretty well so far, which is why we decided to cut rates. We're overly tightened as it is right now, so we can let the relief valve go on. But he did say that future decisions are going to be based on the data that comes forward, right? And to me, that sort of reads as it's not out of the question that they'll cut rates in July. They probably won't, right? But it is still within a realm of possibility if the data this month comes in pretty favorable. And outside of that, like the second most popular question was all about the U.S. importing inflation from the U.S. because the Canadian dollar, our currency, is going to get hit if the U.S. doesn't cut rates. And basically the response to that is that we don't need to move lockstep with the U.S. Historically, the Canadian rates have been lower than the States because we're more interest rate sensitive. And on the way up, as we were hiking rates, it made sense that everyone was hiking alongside the same time because the inflationary pressures were global. Everyone is feeling the same global inflationary pressures, right? Now that most of that has been relieved off, everyone has their domestic needs to be met, right? And so as a result, we have the ability to cut rates, not lockstep with the US, and not have a material impact on inflation is sort of their thought process. And also, he did say that we have our own Canadian currency, so we shouldn't be looking at what the US does anyways. It does impact decision, but not as drastic as most people might think. And the last important note is that there's probably some room for more rate cuts, even if the US doesn't cut rates. We still have a greater divergence to move out from the US. It's not like that we can just cut rates once and we have to move lockstep.
Yeah, he did dodge like the entire question on would we be essentially importing inflation quite a bit. And even from the stories that I had posted as well related to the rate cuts and whatever's happening on that landscape, that was the number one comment as well. It's just like, look, like our loony's probably going to be going to the shitter after this, right? Like it's just kind of the reality. And I wish there was a better answer other than, yeah, like we're probably going to be trading off economic growth or like what appears to be economic growth because GDP would in theory go up in exchange for a loonie weakening. So I don't necessarily know that we're going to feel that much richer. Like we might feel just as we do today. Yeah.
We're basically saving our domestic economy in the short term and then hurting, to your point, the Canadian currency in the long term. But the lady did bring up a pretty valid point about the rate cuts, right? It's like, again, we move in synchronization up, but as we come down, it doesn't necessarily need to be synchronized, especially if most of the global supply inflation that everyone is facing has tapered off. Now you sort of normalize back to the rates that you need to go to. But yeah, no, I agree with you, man.
What are you going to do? Do you think there's a change that needs to happen from a portfolio perspective, or do you just live life the normal way? Right?
Yeah.
And you think we're going to see anything different in the real estate market?
Here's the thing. You don't make portfolio decisions based off of 1 meeting or 2 meetings or 3 meetings, right? You look at your real estate portfolio over a 10, 15, 20-year horizon. And it's a good reminder to us again. The last 2 years have been a good reminder to us again to look over our portfolio in the long term. So I don't put any sort of weight on these conversations on, long-term buy and holds. It is what it is. Like, I fundamentally think that Canada still has a supply-demand problem, and these one-off meetings are not going to change that, right? What do you think? Sort of along the same line?
No, I agree, right? Like, it's kind of like, okay, cool. Like a 0.25 didn't do jack shit, right? From my personal portfolio. So I just don't think anything is really going to change, right? And I think once we start to see more aggressive verbiage, right, then maybe I'll play the entire rate game. But until then, it's slow and steady investing is kind of the way to go.
Yeah, and the last note I'll make here is that the U.S. did release jobs data today, and it came in a little bit over 90,000 than expectation. So it came in at 272,000, so significantly higher than expectation.
This is embarrassing.
Yeah, unemployment went up slightly. It came in 0.1% higher than expectation. But that's more so as a result of people not listing jobs anymore. Not necessarily people getting fired, but there's less jobs available, right? And I think wages also went up 4.1% year over year, and the expectation was 3.9%. So it's like, again, we're diverging away from the States. The States is still trucking around very strongly, whereas Canada is struggling drastically, and we're already cutting rates. And this makes the likelihood of a U.S. rate cut even less now. Okay, that's enough rambling from us. We're going to jump into today's episode. We have Adriana Ostapenko. She's a multifaceted real estate investor and an entrepreneur in every sense of the word. She holds CEO positions in a construction company, her VA company, and also her multifamily real estate investing company as well. Her story is super inspirational. She started off investing in single-family homes and converting them into fourplexes back when everyone was doing duplex conversions in 2016 and 2017. And she now recently jumped into the multifamily game with over 100 units under her belt. She's doing multifamily investing and getting full BRRRRs, that's right, full BRRRRs on properties in New Brunswick. And on top of that, she gets into joint ventureships, how to raise capital for these projects, and some of the struggles and hurdles that come along with growing a massive portfolio. Before we jump into today's episode, make sure to like, subscribe, share with a friend. It helps bring amazing guests onto this podcast and keeps Mayu and Di motivated. And without further ado, let's jump right on in. Hello, everyone. We are joined by a very special guest, Adriana Ostapenko. Adriana, thank you so much for joining us here today.
Yeah, my pleasure. It's so great to be here.
So, Adriana, for anyone that doesn't know you or doesn't know you too well, why don't you give them a quick background on yourself, how you got started in the real estate game, and then kind of the evolution of yourself to what you're doing today, because you're doing quite a few things. So let's hear it.
Yeah. Thank you. I started real estate about 8 years ago. I had a big why. I was had 9 to 5 jobs. My husband and I were living paycheck to paycheck. We had 2 little kids at home, and my mom ended up going through a mental health issue, and I took her in, and she moved in with us at our townhouse. I moved my son's crib out of his room and stuffed her in this tiny room. And something clicked within me, and I thought, holy crap, how do I start to not only take care of my own family financially, but take care of my mom? And how do I start to build wealth that goes beyond myself? We don't come from an investing family, not even stocks. So I had no idea what investing looked like and how to grow wealth. So I went to our friend Google and started researching, and real estate popped up. My husband's in construction. He was working for a couple that were doing high-end flips, and they were living in this really beautiful home. I got to go there and meet them, and I thought, there's wealth in real estate. So how do I go about starting to, invest in real estate? Education was my step number one. I signed up for a, membership on an investing network so I could learn how to do this, so I could meet other people that were doing this, got a coach and mentor, and then went to work in starting our real estate investing journey. We invested for about 4.5 years here in Ontario. We started doing BRRRRs, smaller multifamily, single family to fourplexes mostly. We did 5 of those in the first 4.5 years. A lot of work, a lot of learnings, doing everything from raising capital, finding the deal, doing the project management, construction, property management. Just learned every single aspect of it that I could. And then we got to a certain point and I'm like, okay, this has been great. How do I scale from here? I'm tapped out. I'm doing everything. I'm taking care of every part of it. And that's when multifamily came into my life. And we scaled quite quickly from there. We went from 20 units to over 100 units in about 18 months by focusing on multifamily. And I currently own an asset property management company. We have about over $20 million of asset under management. And we are doing a development now on the multifamily space. It's our first one. So looking to scale in that direction as well.
Awesome. Okay. So definitely a lot to break down there. I think for a lot of people, as you mentioned, the first steps are generally the hardest, right? Because in your position, you are tight on capital, you are tight on, like, you're, again, paycheck to paycheck. And real estate's one of those investments that are pretty capital intensive, right? So how do you wrap your head around getting the capital ready to purchase your first investment property? And how did you go about selecting your first property when you first got started?
I was fearless. First of all, I didn't have too much to lose to start with. So I'm like, this is going to work or this is going to work. And if it fails miserably, I'm going to pick myself up. I'm going to have learned from my lessons. I'm going to go out and do it again and do it better. So our really very, very first step was to finish our basement apartment. We lived in a townhouse in Mississauga. I'm like, this is the very first thing that we can do, kind of piecing it together. We did all of it, most of it ourselves, and got a tenant in there, legally duplexed it. And then I sold it. I thought, now we're tapped out again. I don't have any qualifying power. I don't have any cash left. Yes, we have this now property and tenant there, but how do I go? What do I do now? So we made a decision I'm like, if I sell the home that we're living in, I can, come out with it about $250,000, and that's going to give us our starting point. So that's what we did. We sold it, started renting, and used that capital to start doing our very first few properties.
I find pretty cool. You really scaled up your portfolio right after that. I think you had said by doing single family to fourplexes. And if this was 8 years ago, we're really probably talking like 2016 to sounded like maybe 2020 range, right? That wasn't very common. So what cities were you doing this in? And what did the deals look like? What were you guys doing essentially?
Yeah, so most of them were in Hamilton. That's really our very first property was there. We found this. The way I started my search was I was looking for density. I already knew I wanted to do conversions. So kind of follow the LRT line where they had this new zoning that was allowing for density. Found a single family home. I mean, it was rough. Don't get me wrong, like really, really rough conditions, but we bought it for $345,000 and, started the process of application. I didn't know at that time that I could do a fourplex out of it. I mean, I knew that density wise I could. I didn't know if logistically I was going to be able to. But once I was in there, I'm like, oh, I need to make this happen. Same kind of attitude that I had with the basement was like, I just feel like there's solutions here. We're going to figure something out. Because at first they're like, no, you can't, how do you going to get the exits? And I'm like, there's got to be a way. So we did figure it out and applied for four units and got it done. And by the time we were done, it was valued at $700 in about 8 months. We put about $250 in. I did raise capital for that one. I brought in a JV partner and we went 50-50 on it. And by the time we were done, we were able to refinance and I bought her out and we held on to the property. And a fun fact about that property. So that was my very first one outside of my home. We sold it at the peak of the market in 2021 to a developer for $1.4 million.
Holy crap.
Wow.
Yeah. So multiple six-figure profit on that.
Were you guys doing like the mountain area or like, because I know everyone in Hamilton loves this like mountain area, right? Is that kind of the same area, but you would identify that you could do a fourplex there while everyone else was stuck doing like duplexes? And I feel like even now they're still only really doing like triplexes, or was this a different area?
So this is downtown, which is interesting when it comes to tenants, I have to be honest, but it offered us good value on the purchase as well and just properties that needed love. And I mean, we weren't scared. We did massive renovations, everything brand new. And again, I didn't know I could do a fourplex. Once I was in the property, that's when I was like, oh, I feel like I can. And then I got spoiled because fourplexes are awesome. In the smaller multifamily space, fourplexes are like that fourth unit's pure cash flow. So it was cash flowing so nicely after we were done and refinanced. And I'm like, I got to do another one. So then we went and did 4 others.
So just out of curiosity, I mean, a lot of people were doing duplexes at that time because you get charged with a ton of fees when you start building multiple units, right? So people would do it to a duplex and then they'll turn the duplex to the triplex. And I don't think many people went to the fourplex directly there. So that being said, what was the process like? And what were the hurdles and obstacles you faced? And, you know, the additional fees that are associated with it, how did you justify that it was worth it from an appraisal point of view? Because, again, it's so hard to say what the ARV is going to be on a conversion.
Great question. A lot of people don't realize is in real estate, and when it comes to density, the more the better. Like 90% of the time, I'd say. This is why multifamily works so amazing, because at the end of the day, how can it be bad to add an extra unit, you know, to any property, cash flow wise, stability wise, and ARV wise? In terms of how to go about it, I don't know that it would have been much different than getting a duplex application. That's kind of, again, going to the economies of scale here. If you're going to go through the process of submitting, getting the architect drawing, submitting to the city, having all the things, why not go for a fourplex? Like, it's a little bit more work, but way more return for what you get back. So we submit it, obviously, the usual things. It's like fire alarm, fire, barriers, exits and entries, window space in the basement. It's just really, in heights for the basement, it's really the exact same process as you would for same building code. It's just now you've multiplied into 4.
Was there a difference in development charges at that point? No, eh?
No, there was a bit of obviously a bit of a higher fee when it came to the architect's job or the engineer's job, right? Because they had to draw 4 units instead of 2. But again, the cost is not 4 times more. The cost is like maybe 1.5 times more than it would have been for a duplex. So very worth it.
Does that strategy still work today, in your opinion?
It very much does. I am out of Ontario, though, for the last 3 years now. So I can answer with full confidence in Ontario, but we are doing BRRRR strategies and pull BRRRRs all the time in New Brunswick.
Mm-hmm. The single family to fourplex is what, like, people are doing it in Toronto with the Garden Street and exiting CMHC. I do know some people in Toronto that are stopping at a fourplex in Toronto. And I guess the biggest hurdle then becomes you'd have to be able to qualify residentially for those mortgages, right? And I guess it sounds like if Hamilton at the peak of the market was 1.3, 1.4, today, if it's at like 1.1 or something, 1.2, somewhere in that ballpark, because Toronto is fourplexes are up there higher than that anyways. So it still works. It just seems like the biggest hurdle is just going to be qualifying, to go from there. So you did a bunch of these kind of fourplexes. Were you doing them with partners? Were you doing them yourself? It sounds like you did one with a partner for sure, but what about the rest?
Yeah, the first one was a JV, and I did not enjoy the experience. So I'm like, maybe let me just not do that again. So we were doing with partners, but they were like short-term loans. So I would borrow funds for renovations and then pay back a refinance.
Mm-hmm. And would you always buy them out as well?
Every time, yeah. So those, they were never on title, and there wasn't an equity or profit split. It was just like, I need funds to the renovations. This is a fixed percentage. I'm going to do the renovations. I'll pay you back once I'm done. So then we kept the properties 100%.
Borrowing debt, basically.
Yes. So for the rest of them, we did debt.
And for qualifying, how did you continue qualifying for fourplexes? Because usually, again, you get the JV partner because a big part of it is qualifying on the residential side.
So this is another interesting thing, was we owned the construction business that was also doing the renovations of the property. So everything we qualified under B lenders. And I was introduced to the B lending world at that time. And I'm like, this is pretty good. How come nobody people are just so focused on getting A lending? We would be paying let's say at the time, it would be paying 2.8, 3.2 when people were paying 1.9. So yes, there's a difference in interest rate, but that's still pretty good. And really all we needed to do was give them 6 months of bank account statements, and we would qualify under that. That being said, it was really a struggle. Every time we needed to qualify, refinance, it was kind of pulling teeth. And And this is another beauty about multifamily. I don't know that people realize how much easier it is to finance multifamily than residential, commercial than residential. Like, since we've been to commercial, I'm like, this is great. I can't look back now.
So I guess, what was the transition for you to, you clearly had your team set up in Ontario, right?
Hold on. Before we get to out of profits, I want to talk about how you raise capital at this point. Was it predominantly like friends and families? Was it investor groups? What were you doing to raise the capital? How were you instilling confidence to people that you would be able to repay them, and so on and so on? Because I think that's something that a lot of people struggle with, right? Especially in today's environment where capital is tight. So I think that'd be very useful to know.
Yeah, it's a great question. I could not have asked my family or friends at that time. They would have been like, you're doing real estate? Like, no, I'm not giving you any money, So that wasn't an option for me. What I did was I networked quite a bit. I love people. I love getting to know people. So by joining different investing networks, I was just networking often. I was going to networking events, and then COVID came. We were on Zoom so much, and I was just on Zoom calls. I would have 5-6 Zoom calls a day, just meeting people. Once I had a deal that I needed capital for, I now call it, and I coach now. So I share to my students, build your real estate resume, because it will give you a tool. How do you present yourself to an investor? We often forget to talk about, or don't talk enough about, what we bring to the table, what our skill sets are. So, I would build something that shows like, hey, our construction experience, the projects that we have completed and how they went, what exactly the strategy and plan was for that property. And honestly, I've never had an issue raising capital, and always been able to raise the capital that we needed for our deals. Now, I do have a compass that's really strong within me that says I'm never going to borrow more than I can pay back. If that means I'm selling my house, if that means like I'm cashing out things, that's what I'm going to do. So I don't over leverage. That being said, like, I will borrow. I know that it's going to work, but if it doesn't, then I know I have another asset that I can dispose of to make sure that everybody's paid back.
Yeah. Do you borrow with the interest deferred, or do you pay on a monthly basis as well?
We've been paying on a monthly basis. We were paying everything on a monthly basis. So I would borrow the interest and carry costs and be paying that monthly.
So that being said, I mean, just on a high level on the capital raising front, to round off this topic, if someone is getting into real estate, maybe they have one deal under the belt, and to your point, maybe the family and friends won't want to directly invest with them, right? Could be a lot of headache managing that relationship, not tying family and friends with business. How do you suggest that they go out and build the connections with other people to provide them with capital?
Yeah, join investing networks. Really, that's your key answer. Everybody that's in that group has paid to show up, have a really keen interest in working on themselves and in being in locations like that. They're learning themselves how to do this. They're interested in real estate. So it filters out quite a bit. These are really warm leads. Anybody that's within investing networks, I focus there. And then at the end of the day, sales and marketing is about letting as many people know about your product as possible. So just have lots and lots of conversations until the right people and the right partner say, yes, this is good for me. This works. I want in.
So are you raising for a particular project, or are you raising capital in general? Right. And I guess that goes with because if you're going to an event and you might not have a project right now that you're raising for. So are you then just saying, hey, the guys, I'm looking to raise capital at 12%, 13%, whatever, 15%, whatever you're offering to people, right? Are you just kind of broadly saying that, or is it, once you have a project, you then put together the project's kind of details and numbers and timelines and stuff like that, and then you share like a return for that project?
Yeah. So it's always been project specific. What happens when I don't have a current project to go and to raise, which happens often. I'm keeping really good track. I have a CRM. I'm still having conversations. I'm letting people know what they do. And I'm mostly interested in finding out what they're looking for. Once I find that somebody is a good fit because they are looking for specific types of investing that I can assist with, then I'm going to take note of that. I'm going to have a second discovery call with them. I'm going to get to know them, and I'm going to keep records on my end next time I do have a project, I know exactly who to reach out to say, hey, some things come up, but I think would be really interested in hearing about it.
Yeah, I think that's important to have a CRM, right? A lot of people try to keep mental note, and especially if you're raising on a large scale, you can add them to a drip campaign, which is something that I see a lot of, I think not private money lenders, people who are borrowing private money have drip campaigns, and I get the email from time to time. That's a key point. We use that in our wholesaling business, and without it, would be totally lost on all the leads that we have.
I had one more question, which is like, it's kind of like a funding ratio, right? So, because I have conversations with clients that are trying to buy apartment buildings or development, blah, 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 and they'll be taking a project down and they'll say they have the capital through X and Y partner, and then it never ends up heading on the capital side, or sometimes it does, sometimes it doesn't, right? What's your rule of thumb, right? So, for example, like, do you aim to have it oversubscribed? Like, if you're raising $1 million, you aim to have 1.5 million like raised, right? And then, you know, with confidence that even if some people pull out or it doesn't end up working out for some of them, then you're fine. Do you have a rule of thumb like that? Is there any kind of guidelines there that you can share?
Yes, I mean, I'll definitely overraise often. It's very rare that we're in a situation where we're like going back to that story, like it's sold out, a kind of thing, because of the process that it works is I'm working with each investor all the way to the point of like we have a signed agreement and a deposit in place. So by that time, they're pretty committed. We're both pretty committed because we've had enough conversations and we follow through enough of the process and it's pretty committed. So it's very rare. It's only happened once to me that an investor gave the deposit and then said, sorry, like something's come up, I can't do it. And I refunded the deposit and he went on his way and we found somebody to cover up pretty quickly because I had so many conversations with other investors. But it's usually, you know, by the time we're towards the end and they're committed, they're in, and we're in a good spot to ensure that we can fund.
Okay, sorry, I have one more question on this. So I know you're targeting investors. The biggest problem that I see with investors is we have a shit ton of capital at some point of times, and we are near broke at other points of time, right? So how are you managing that from like a timeline perspective? Because someone could have like 500,000 today that they could lend to you. And if we're hitting them up in 6 months, the reality is they probably would have deployed that capital by then, right? So how are you kind of managing and navigating that kind of sequence?
I spread my net really wide. So maybe I have 30 people that have $500,000 to invest at any given time. So maybe that person can only do 50 right now, but somebody else can do 100. And then we can, you know, I systemize what I do in every single way, from the asset management perspective, acquisitions, operations, but also capital raising, so that it functions as a business. And we have a constant stream of leads coming in. We have a constant lead of, you know, getting to know people and putting myself out there, networking and building trust. And then we have, you know, on the output side, the other thing that has happened over time is we have built such an incredible pool of investors that have worked with us. They get first right of refusal for any deals we have available. And very, very often we're sold out before we open up to new investors because we built so much trust over time. What ends up happening is every time I'm giving investors their capital back, they're like, can you take it again? Like, what else is there? Can you just keep it? So that just keeps us, you know, with a flow of capital available, which is quite nice.
It's like a marketing funnel ultimately, right? You feed the top funnel, and not everyone ends up going down the funnel, but as long as you keep on filling the top, there are people that are going to end up panning out to be investors. That being said, sort of want to pivot the conversation here into your out-of-town investing. So you had success in Hamilton, or I guess in Ontario, in investing. What made you want to invest in another province? And did you end up selling your existing portfolio in Ontario?
Yeah, so I was sharing that with you when we were recording that. The first reason why was I had built this portfolio of 20 units and was feeling pretty tapped out. And I thought, how do I scale but do less? You know, and I started asking myself that question, started asking everybody around me that question, and was just kind of getting different tips and advices from others. Somebody said to me, we were sitting at a table having dinner. She said, you know, I was only able to take a step back when I started investing out of province. It was a bit of a light bulb moment in my head. I'm like, that kind of makes sense, because then I'm not going to have an option to drive down to the property and take care of something. I'm going to have to figure out a different way. And so that was just the very first light bulb. When I started researching other provinces, I'm like, so you're telling me there are landlord-friendly provinces in Canada? Like, that's a thing? Like, I didn't even know that. I'm like, holy crap, this is good news. So really just started searching and kind of set my eyes out east in New Brunswick. And then from that point, I started just networking with a lot of investors that were investing out there and kind of learning about the market and how to go about getting started there. In terms of my portfolio here in Ontario, I would love to disperse of all of it. We sold a few. We still have a couple properties left, and we are hoping to liquidate in the next, hopefully 12 months or so.
And what's the strategy out in New Brunswick that you're implementing? So I know apartment buildings is a big part of it. Are you buying like sort of burrs? And if so, is it like, I guess, how do you raise the rents in these units? Because there's also like the ethical way of going about it. Some people, I know there were some articles I saw where someone just evicted everyone in the building and then raised the rent to market rent. And that obviously didn't get great PR. How are you going about these sort of burr projects in New Brunswick?
Buying apartment building is like buying business. And you are looking for certain fundamentals, right? We are buying something that we need to add value to increase valuation. And something that we can operate long term, because we have a minimum 5-year terms on apartment buildings, but really think as long as a 10-year timeline. So value add can come in a variety of ways. We've implemented multiple strategies. We have implemented where we did need to exit tenants because we were going to be redoing everything, like plumbing on the walls, new heating systems, new electrical, and would have been impossible for the tenants to be living in there while we were doing the renovations, to really give the building another lifespan of another 50, 60 years and add value in that way. But we've also had apartment buildings where they were pretty good and like didn't need massive work like that. So we just incrementally increased rents in a way that was bite-sized for the tenants, but just doing that alone. So this building that I was telling you about earlier, it's a 24-unit building. We bought it for $1.7 million. And then over the next 24 months, we just incrementally increased rents when there were unit turnovers or on a yearly basis following the guidelines of the province. By the time we were, went to refinance, we had a 2-year mortgage on that one. It was valued at $3.1 million. So we were able to do a really, really nice refinance without doing any major rentals. There has to be a value add component at the end of the day, because again, it is a business and we're looking to increase value and give a return to our investors, but it could happen in many different ways.
When did you get into New Brunswick, sorry?
About 3 years ago now.
2020, okay. I think we got it around the same time. So I'm going to ask you some questions that I personally struggled with. So we bought a 7 and an 8 in Moncton and St. John. What cities are you investing in New Brunswick today?
Most of our portfolio is in St. John, and we do have one building in Moncton.
Okay. So at that time when we bought in, it was something really low a unit. I don't even remember what the price was. It was like 70,000 or 60,000 a unit or something like that. It far exceeded the 1% rule. Things were great. Refinance at close to about 100K a unit. And then prices continued to kind of go up, right? And so what are you seeing right now for prices per unit? I know that's not always the best metric, but for simplicity, what are you seeing on a price per unit basis in St. John, New Brunswick right now?
Yeah, I definitely is so dependent on not only the purchase, but as you imagine, the strategy that you're going to implement and then the end where you can get. We usually look at, we're looking at older stock, we're usually looking at about 100,000 per unit. Sometimes we're able to negotiate it down to 85. We bought a 50-unit building. We're nearing 2 years and we bought it for 85,000 per unit. But we're somewhere in between 85 to 100. Now, if the building is brand new, fully renovated, then that goes up significantly from there. Because on our renovated units, we're able to get somewhere between 195 to 100 per unit.
Wow. Holy crap. 50% lift per unit. 100% lift per unit. Sorry. That's unreal. And where are you getting these deal flows from? Is it just like from a couple of brokers that you work with, or similar thing where you cast your net broad and just a bunch of people send you stuff?
Yeah, I always go as wide as I can. because there's no other way. As much as I love loyalty to realtors, at the end of the day, people have different deals available to them. So I do spread my net quite wide. An example is right now we're in a position mode out there because we have stabilized and refinanced the majority of our portfolio. So we're like, okay, we're ready to go again. And so I'm just sort of touching base with everybody that I know and letting them know, hey, we're looking. Send me, anything that you have going on. We look on that MLS all the time. A lot of our portfolio comes from the MLS. I don't know why I know you're wholesalers and work on off-market stuff, but honestly, we do get a lot of things from MLS as well. Obviously, it's never at its best what it's listed on there, but this is the work that we do and go in and negotiate and make sure it makes sense for us. We do look at a lot of deals before we end up, acquiring something, and that's just the process. But I spread it as wide as I can.
So just out of curiosity, I mean, on the MLS right now, at least speaking in terms of Ontario, it's very difficult to value add units if you're not adding additional units, right? Because the rent, you can't really do much with it. In New Brunswick, it's obviously a lot easier. I say that it's still probably not as easy, but still easier than Ontario. I'm wondering, when you're looking at these properties on the MLS, if there's competition in that sense. Because in Ontario, again, like multifamilies are sitting without much competition. Are there multiple bidders for these apartment buildings? And if not, what do you think is the driver? Have they just slowed down because of interest rates?
So there is competition on apartment buildings out in New Brunswick. It's very common. Like just this week, we put a couple of offers and they both had auto offers come in at the same time. So there is competition there. It is much easier. I think one of the biggest items when it comes to New Brunswick that gives us an advantage is if for tenants not paying rent, they're out in 30 days. No hearings, no processes. They're not paying rent, they're out. Which, as you can imagine, that brings a really massive sense of relief to the landlords, knowing that they can operate better. Most tenants actually just leave on their own because they know they don't have an option. And that's for non-payment of rents. We do have regulations around rent increases, and we do have regulations around like rent evictions that we follow, to the best of our ability when it comes to the regulations there. When it comes to Ontario, I think like tenants is probably the biggest holdback. I mean, I'm not interested myself in looking in Ontario because I still have a triplex in Hamilton here, and it's been going through a lot of issues with tenants. And I'm like, I've no desire to do that again or continue to be a landlord in Ontario. So I do think that's probably what stops a lot of investors from getting to the multifamily space here.
Mm-hmm. That's interesting. I think you're right. Like, I think things definitely become easier when you remove that tenant risk for you as a landlord, right? Like I'll also say New Brunswick, they're very kind of strategic on their renovations. They're not nearly as expensive as it is here. So even on turnover, we usually kind of save some money compared to our cost on turnover here sometimes. But the next question I was going to ask is, do you still, in your opinion, because I know you said you just finished your project in New Brunswick, you're now looking for the next one. Have you considered other provinces outside of New Brunswick? Do you still think New Brunswick is the way to go? The obvious options would be Alberta or the US even, right? So just kind of curious your thesis on this.
Yeah, so I did dive into Alberta last year quite a bit. I took quite a bit of the summer. I was just putting offers and having conversations, understanding how the market works out there. I was a little thrown off by its ups and downs.
The oil and gas ups and downs, you mean, or?
Yeah, so part of what happened was we were putting an offer on, a large building there, like 46 units. And I was talking to other investors from that market that had apartment buildings, and they would tell me like they're selling their apartment building now for the same price they bought it 8 years before. And they
was it in a large city like Calgary and Edmonton and stuff, or?
This was in a suburb, to be fair. It was in a smaller town around Calgary. So I do know that it changes a bit, but that was just some of the conversations we were having. And I'm like, okay, this is, and also he was showing us his rent roll from like where rents were like sometimes 1,700 in a 2-bedroom unit in his apartment building. And then the next year there were about 900. And that's just because the market like shifted and people had, increasingly moved out, and it was just this massive drop. And I'm like, so you can't count on rent increasing. You can't count on appreciation. Like, what can you count on here? So I kind of like took my eyes off of her at that time based on those conversations and having focused in New Brunswick. In New Brunswick, we have now a whole team there, right? We have construction team, we have property management, we have boots on the ground, we have snow, we have lawn, we have everything set up there. So obviously it makes sense to keep scaling there. We're really well set up. We've done enough. We have enough units and volume to know the market really well, tenants, regulations, all of it. So it just makes it much easier to keep scaling out there. And so we would like to. I do want to expand into a second market this year and add a second market to our portfolio and acquisition process. And I am thinking that that's the US. We've actually applied for an L1 visa last month or so. So we're looking into expanding exactly the business that we do here down in the US.
Awesome. I'm curious. I mean, we talked a lot about your successes. What are some of the obstacles that you face when, growing to, how many units are you at now? Over 100, right?
Just over 100. And then the development is about 68 units.
Yeah. So what are the growing pains? Because obviously you're always trying to level up, and as investors, when we talk about it, everyone maybe gets inspired and feels like it's easy, but it's not. There's a lot of headaches behind the scenes. So could you walk us through some of that?
Yeah. So when I started scaling into multifamily, I quickly realized that I had to take off my investor hat and put on a business owner hat. And I'm like, unless I build a business out of what I do in real estate, I won't be able to scale. So I went into this deep dive into the business world, from like hiring, system building, CRMs, processes, SOPs, like what do I need to have in place, automations, AI. I just went into this deep dive and I spent the next year and a half just getting extremely organized, for one, systemized hiring and training, and like getting everything in steps and processes. And I love it. Like, it's just I eventually was able to okay, I have an operations manager that does day-to-day of everything to do with our portfolio. Everything. She just handles so much of everything, like from email, like the Rise, when you guys reached out, she's the one that's communicating and handling and sending things. It just gives me a lot of my time back so I can focus on growth, so I can focus on collaboration, so I can focus on building relationships to raise capital. We have systems, we have processes, we have everything set up that allows us to scale.
I find that it's tough for a lot of investors to spend the time creating systems because we're always either working on something or looking for the next deal. Whereas, as you probably know, when you're focusing on systems, in the short term, it is a sacrifice of time because you might feel like you could be doing something that can earn you money now. But over the long term, when you dedicate hours into building the SOPs, right? Hiring the right people, training your VA, because now that you're saying your VA is very helpful, I could imagine the first month and a half, it was a lot of one-on-ones with them and corrections, right? So it doesn't happen overnight, but it's an investment that doesn't necessarily pay any return in the short term. In fact, it probably costs you money in the short term, but in the long term, it's going to pay massive dividends to your business.
That's a really great question. That is what stops a lot of entrepreneurs and business owners from doing that. First of all, a business needs to be profitable. And that was part of when I thought okay, I need to create a business around real estate. Number one thing about a business, it needs to pay me and it needs to be profitable. Otherwise, it's not a viable business and I need out of here. So part of the process of building the business was, what value do I bring to the table? What is a product that I'm selling here? How do I get compensated appropriately for it? What is the compensation structure? I paused and took the time to understand what the model behind, and how do big REITs do it? How do big real estate investment companies do it? Let me understand what the model is and start putting, the income streams in place. So if I hadn't stopped to systemize my business, I wouldn't have the income stream that I have today, because it was through that process that I understood what is it that I do, so I could package it, so I could sell it, so I could value it and create a compensation around it. So I'm much better off financially now than I was when I was just doing, but when I was doing it as an investor only, waiting for, a one day a paycheck, when now I have income streams that cover the business costs plus pays me for running the business.
No, that's a solid point. And I was thinking about this randomly maybe like a week or two ago, I was like, okay, like when I look at my like annual revenue, I guess across the portfolio, it's substantial. It's well, like over $1 million in revenue. And I'm like, where's all of this going? Right? Like, and I didn't even have the answer. I was like, okay, I know I have like a bunch of random capital calls just kind of pop in, right? But it's because we just kind of build, acquire, sell, build, whatever. And you're just constantly like moving those like fun parts of the business, right? Because that's where we get our adrenaline rushes, right? Versus like sitting back, doing bookkeeping, looking at everything holistically across like multiple like corporations and stuff like that. That's almost like non-existent for me, right? So it's definitely something that I think me and Austin have both felt the bottleneck of that, right? Where it's like, okay, like we don't actually know we don't have control of our portfolio, right? So that's a solid point. Last question for you. I don't think we covered this, but when you guys transitioned into the apartment buildings, we might have actually asked this already, but when you transitioned into apartment buildings, did you still stay 100% ownership, or did you move into the GPLP model? And how do you plan to kind of do that in the future?
Can I just say something about what you just mentioned there?
Yeah.
And then I'll answer this question. You were talking about not having like the control, and I just want to like emphasize, I did pause my acquisitions at the times to focus on the business because I had to. So we did, but we had acquired so much and there was a lot going on. It was a bit chaotic. I'm like, okay, pause, let me organize, let me systemize, let me hire. And then I'm like, okay, now we're good. Now we're in a good place. Let's go back and acquire again. Something there is I sat down at first. I'm like, okay, I need to build systems. Like, I don't know how to build systems. Like, somebody coming to tell me how to do this. How do you go about doing that? And it wasn't until, and this was the big realization that I had, it wasn't until I hired the person that was going to build the systems that things started to move. So it wasn't really my job to build the systems. It was my job to find the right person. So when it comes to like bookkeeping, accounting, that took quite a bit of my time because we manage a financial organization here. There's a lot of corporations, taxes, dividends, investors. So finding the right people that you can work with and giving them guidance on what kind of systems you need set up and then letting them take over from there. And then you're just there to supervise and adjust and, ask questions. That's really when I was able to make really massive stride on building the business. So just wanted to give you that little tip of like, and take some of the pressure off yourself to like finding the right person. That's really your job. And then guiding them through the process of building what you need to be built.
For sure. And then I guess the second question there. So as you guys scaled into apartments, did you go at it on your own? Did you go the GPLP model? Like what was the model and what works, what doesn't?
Yeah, great question. So we are 50-50 with our financial partners on all of our apartment buildings. I quite enjoy that, honestly. Like, to me, goes beyond. I mean, eventually, if we ever want to, we could do our own 100% projects. But part of my vision when I switched over to apartment buildings and was, how do I share the wealth? Going back to my mom, now she invests with us and my sister invests with us. And, it took them a little bit to see what we were doing, the success we were having before they felt comfortable. But I can see how life-changing it is for them. My sister has a really high, like, performing job. She's a director of a company, makes a ton of money, but she's like, I don't have time to think of like investing. Can you just take my money and make sure it's growing for the future? And in the case of my mom, she needed an additional source of income in order to be able to retire. So I'm like, okay, what can we do here with your finances to get your money working for you to provide you that additional source of income? So I saw how much impact generates in other people's lives. I have something that I can bring to the table, which are, everything that we do from our expertise and systems and processes and company and I realized I have a gift for building wealth for others as well. And that was really the intention of my heart when I first started investing in real estate. How do I build wealth that's gonna, overflow into others around me? So I love that. I love that I get to bring investors in. When I spent a whole day at the bank, going to different banks last week and sharing $1.2 million worth of, payouts, it was such a joyful day for me to be able to give investors, their money back plus returns. So 50-50 financial partners. Most of them are corporate shareholder structures because it is the simplest, easiest way to acquire apartment buildings, but we do have on our bigger one, our 50 units, we do have a GPLP structure on that one.
Awesome. Yeah, no, thanks so much for sharing that. And you're absolutely right. At the beginning, we have a lot of similarities in the sense that at the beginning, I never raised money from family and friends, but then after becoming more experienced, they gained a little bit more confidence. And it feels good, especially when you're able to help family, right? Like my mom and dad, we partnered on a few flips and it was profitable. And yeah, that's arguably a better feeling than making money for yourself. But at this point in the podcast, we asked 2 questions to our guests to wrap things up. The first question is, in your opinion, what is the biggest risk in either your for new real estate investors or your business?
I guess for new real estate investors, I'd say the biggest risk is lack of experience and not knowing what you don't know. Often I'll have conversations with investors that have never done a deal before. And because I coach on raising capital, they'll come and ask me, I have this deal, I need to raise $10 million. And I'm like, and how much have you raised so far? And they're like, nothing. I'm like, maybe don't start with $10 million raise, maybe go back a minute here. Start with a $500,000 raise or a $250,000 raise. Get your feet wet. See how well that works before you go and borrow all this money and you haven't had really built out the confidence or experience to be able to perform as you should when you borrow investors' money. So get educated, but gain experience. The greatest way to learn is by doing it. So go do a few deals, start with the things that are achievable and gain confidence as you grow. For myself, I got to a point where life is pretty good, business is pretty good. And I'm like, okay, I still feel like I'm really young. And what's next? I think there's a temptation for comfort. And I'm like, I could be good here, So I think the risk is too comfortable and not pushing myself enough to go to a new level. I did pause for a minute here to say, okay, things are pretty stable. What's next for me? And the way I do that is by working on myself and doing self-development. And I've been trying different things, which have been fun. I did a psychedelics retreat recently. So that was quite interesting. And just doing some self-development work to kind of tap into limiting beliefs and breaking through the next level.
And then I guess with regards to your business, where do you see your business growing in the next 2 to 3 years? I know you just talked about a little pause, but in the next 2 to 3 years, for now, where do you see your business growing?
Yeah, so we're back on our position mode in New Brunswick, so that's exciting. We'll see what comes through in the next little bit there. Expanding into the US is another big one for us. We're going to be opening affiliate of our business there. And then, starting to do acquisitions and really the same model we have here. So it's kind of what's coming up next in the next couple of years.
Awesome. This was a fantastic podcast. A lot of value. And I have tons more questions. I'm sure Maya does as well. I feel like we just scratched the surface. We didn't get into it, but you also own a contracting business. You also have a VA business. So there's just, again, we're probably going to need to have you on again, just scratch the surface, but really appreciate you jumping on. If people want to connect with you, learn more, follow your journey, how could they best do so?
Yeah, Instagram and Facebook, Adriana Ostapinko. I also have a YouTube channel and a podcast, the Adriana Ostapinko podcast. So make sure to subscribe and follow on there. And I'd love to have you guys over sometime. I do some in-person podcast episodes in my house in Georgetown. If you're ever coming out west, I'd love to have you guys by and we can record something in person.
Awesome. So everyone stay tuned to our podcast because Mayu and I guess will be featured soon. All right. Awesome. If you guys enjoyed this episode, make sure to share it with a friend, comment. It helps bring great guests like Adriana on. And until next time, everyone, invest smarter and live better. Take care, all.